Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. I want to show you a nice little trade that I had today using the S&P micro futures, the MES. What we're looking at here on the left here, and of course I'm going to blow everything up so you can see everything, but this is actually a trading level that I had found on that actually originated at the end of November. Today is December 16th. So that's about 3 weeks past. And if you look here, you're seeing we're looking at a 15-minute chart here. So this is the trading level for a long on the S&P futures that I found. And as you can see, over the course of 3 weeks, price had never been back there until it got back here today. So all this other time it had been, obviously above here, and eventually it kind of looped down and finally made it back. So that was the foundation of the trade here. So what I'm going to do is I'm going to show you what I was looking at in terms of creating the setup, and then of course I will then show you how it played out. So what I'm going to do is I'm going to slide this thing over here, and we're going to blow this up, and we'll kind of go through this here. So this is a 15-minute chart, and what we're looking at here is notice price had dipped down here, and again, this is on the 25th of November. Price had dipped down here, consolidated, and then notice price then kind of popped out of here um, with this series of green candles here. Um, During this time, in this little kind of region where it consolidated, supply and demand are in balance. So what am I talking about when I'm talking about supply and demand? Well, if we think about the shares that are required by buyers, we could think of that as the demand for shares in this region. Similarly, we can think about the shares that are offered up by sellers. We could think of that as the supply of shares in this area. Okay. And so within this little area here for about 5 or 10 minutes, supply and demand were in balance. And then right here, there was a sudden exhaustion of sellers. No one was willing to sell here anymore. And so when price popped here, essentially what happened was buyers ran up the price chart in order to find willing sellers. Okay, and so this sudden exhaustion of sellers uh, left in its wake only demand. There was no longer any supply. As a result, we call this a demand zone here. And so, in fact, this is what's referred to as a drop base rally formation. Okay, but what we mean by that is price comes down, consolidates, and then pops, and then so that's a drop base rally. Okay, and then when price returns here, there is the expectation that there is going to be another round of buying there. Why? Because essentially price was in here for a very, very short amount of time, and there was the presumption that not everybody that wanted to buy had the opportunity to do so because price left there in a very short amount of time. And so when price returns here, we can think of this as there is untapped buying pressure that we're waiting to take advantage of. Okay, so that's the foundation of the trade here. Okay, and so when we do this here, and let me just bring this back here so we can see the risk reward proposition here. Okay, once we have that zone laid out here, okay, the dimensions of this zone define our risk. Okay. And so the front line of this zone was at 68.21. The back line of this zone was 68.13. Okay. So right there, that's 8 S&P points approximately. And then I give it a little extra wiggle room, a little extra cushion, a little extra room to breathe. And I give it basically another 3 points or so, which of course is 12 ticks on the S&P Okay, so the entire dimension of this zone was actually 46 ticks. Okay, and at $1.25 a tick, since we're using the micro, that works out to a risk of $58 per contract. Okay, so that was the foundation of the trade, and then right here we can see this is the risk reward proposition. Okay, that's our risk there of the zone plus the extra wiggle room there, and then that's a 3-to-1 move out of here. Obviously, if I pull this thing down, that would be about a 2-to-1 trade. So the initial goal, of course, was going to be a 3-to-1 trade. But that was, of course, predicated on what might get in front of the trade when it actually played out. but that was the initial goal. Okay, so now I'm waiting for price to return to this level in anticipation that there's going to be a bounce. All right. So what I'm going to do now is I'm going to flash forward to today, and we'll see how it actually all played out here. So let me just bring that up here. Let me just spread this out a bit. Okay. So right here, early this afternoon, it had been bouncing around here, and then at that later early this afternoon, price actually came down here and ticked the front line there, and so that's where we got our entry at 68.2150 as I had initially laid out. So for about the half an hour or so, it just kind of bounced around here. In fact, if I change this to a 5-minute chart, you'll see that basically price this kind of hovered around this region for a better part of about a half hour. But then eventually it started to then bounce and then actually start to pop. So once it actually, while it was hanging out down here, I looked above here and I actually saw here um, there was an area where price had come up here, consolidated, and then noticed that then it kind of dropped from there. So that kind of made sense to use that as a target, particularly if you kind of laid it out here. You'll see that that's about 2 3/4 to 1 at the front door of that zone. So that was actually pretty close to the 3 to 1 that I was actually looking for. So at that point, I said, okay, that's where I'm going to look for my target. And then, as you can see, price then for about a half an hour, kind of puttered along there, and then eventually we got that pop there. And you can see it actually came right up to that zone, and then it ended up dropping. And then eventually, of course, it then came back and went further. Obviously, no problem with that. I got my money out of it. So basically, we were in the trade for, I don't know, that's about 45 minutes or so, a little less than an hour. And so the risk profile I showed you before, we got about 2 3/4 to 1. That was 126 ticks. That works out to 272.75 to 1. And if you do the math, you can see that came out to about $158 a contract. I had actually put on 3 contracts, so the profit on this was about 470 something. So at any rate, that was a nice trade. So anyway, that's the supply and demand concept in a nutshell. So I'll be bringing you some more of these trades as we go along. This is Mitch Firestone with Precision Trading Labs. Thanks for your time, and I'll see you next time. Bye bye.